In today's video, I want to talk about tax residency in Singapore. Singapore is a place that a lot of people might be considering as a place to move to, either full-time or part-time, or a lot of people might be setting up companies there for the great banking and whatever. And so it's pretty good to know, when do you first of all personally become a tax resident in Singapore? Like, who has to pay taxes in Singapore? And also on the company side, which companies are taxed in Singapore? If you set up a company abroad and you live in Singapore, when is that company going to be taxed? Is a Singapore company going to be taxed in Singapore if you perhaps don't live in Singapore? And generally, how does the tax system of Singapore work? What income is taxed, etc., and everything else related to it? I've been researching this topic over the past couple of days, so I decided I would put everything into this one guide on the Singapore tax system and the Singapore tax residency, so you know exactly how it works. Before we get started with the video, if you're looking to move to Singapore or set up a Singapore company, you can do so with my partners at Awesome, which I will link down below in the description. Generally, when you set up a Singapore company or you relocate to Singapore, there's quite a bit of things you need. You're going to need to get an address for your company. You need to get what's called a local nominee director. You need a secretary. Then you need to file the application for the employment pass, and they have like a point system and everything. What Awesome does, which is really great, is that they put everything into one place. So you just pay them one fee. They take care of all the government fees, all the filings. They will get you your nominee directors, your secretaries, your address, and everything else you need. And they will also help you file the employment pass application so you can actually get approved for your residence visa in Singapore with no hassle. And all of this happens without requiring you to be in Singapore or to go there. They have local experts in Singapore who know how to handle this. They've done this thousands of times before. So if you are interested in either setting up a Singapore company and or relocating to Singapore yourself, you can check out Awesome using my link down below in the description, where you can get 16% off on all of their services. So first things first, let's just talk about the Singapore tax system, which is a territorial tax system. Now, what this means is that what is taxed in Singapore is only local income. So foreign income is not taxed, although there's some nuances to that, which I will cover in a second. Generally, most countries that you might be coming from, if you're coming from Western countries, they usually have what's called a worldwide tax system. So if you're a tax resident in that country, you're taxed on all of your income, no matter where it comes. But in Singapore, it's only income that is sourced from Singapore. But here it's crucial to understand, what does it mean for an income to be sourced in Singapore? Many people think that foreign sourced income means income that it comes from a foreign company or income that is paid to a foreign bank account. That is generally not how it works. What it generally means is income that is derived from either assets within that country, in this case Singapore, or from work that is performed while sitting in Singapore. So if you sit and work in Singapore, but you pay yourself from, let's say, a US LLC or something, that is still going to be Singapore locally sourced income because the work was done there. So that is generally what source means when it comes to income. However, there is some nuance to this in Singapore. The first of them is that any income that is received from Singapore companies in Singapore will always be tax. So even if the Singapore registered company is not a Singapore tax resident, and we'll cover in a moment how that can be the case, it is still going to be taxable in Singapore if it is paid to you from a Singapore registered company. So that is the first thing to understand. The second nuance is that for companies specifically, if the income of the company that is not tax resident in Singapore is received in Singapore, so it's received in a Singapore bank account, it is still going to be taxed in Singapore. So while it is possible, because of this territoriality, to have a 0% tax Singapore registered company, if that Singapore company is not tax resident in Singapore, in practice it is a bit more difficult, because if you have your banking in Singapore, which you most likely would, it would be still taxed in Singapore. And other than that, generally in Singapore, income is taxed, but capital gains are not taxed and dividends are not taxed, at least if they're coming from Singapore companies. So that makes it quite optimal for certain cases. If you perhaps have a lot of passive income coming from capital gains, that can make Singapore a great jurisdiction to live. You can potentially live for zero tax. And also, if you have perhaps an investment holding company, it can make Singapore a very optimal place to form that, because they also have some of these exemptions for foreign owned investment holding companies, where if the income of the company is purely passive in nature, it is actually not going to be taxed. Okay, so that broadly covers what is taxed in Singapore. Now talking about who is taxed. So who becomes tax resident in Singapore? First, talking about the personal side. So generally their tax residency has kind of two criteria. The first of them is the very common 183-day criteria. But interestingly, the way it works is that if you spend 183 days in Singapore in this tax year, in the next year, you will be treated as a tax resident. But they also have what is called the 3-year rule, where if you work/stay in Singapore for 3 years consecutively, you will be treated as a tax resident for all 3 of those years, even if in some of those years you stay less than 183 days. So presumably, if you form a company in Singapore, you get your employment pass, which is like your work residence permit in Singapore, and you hold that and you perform work in Singapore for a period of 3 years, then in all of those 3 years, you will be treated as a tax resident, even if you don't actually live for the full 183 days in all 3 of those years. So that is quite important to understand, which makes this a bit more restrictive than some other countries that simply have a simple days test where you can just see like, okay, if I'm not spending more than 6 months, I'm not going to be tax resident. So generally what this means in case of Singapore is that it's quite difficult to have Singapore as kind of a plan B, where you have spent a bit of time there and you have that residence permit as kind of just a backup that maybe you don't live there full time, because most likely if you have that work permit, you will be treated as a tax resident. Now, there are other residence permits you can get, like the investor visa that they have, but that requires quite a lot of money to be invested. So often what I tell people is that Singapore doesn't really work well as a plan B, but it works well as a plan A if you actually want to live in Singapore. Now, again, dividends are not taxed, only salaries are taxed. So if you have the setup with your company and then the employment pass by that company, you can structure your income in such a way that the real tax you end up paying is quite low, because you just pay yourself in salary the minimum that is required to get that employment pass. And then beyond that, you just pay dividends, which is going to be tax free. Now, on the company side, in Singapore, companies are taxed based on management and control. So any company that is managed and controlled from Singapore will be treated as a tax resident in Singapore. And that is regardless of whether the company is registered in Singapore or not. There's a big misconception about corporate tax resident, that companies are always tax resident wherever they are formed. And that is absolutely not true, because otherwise everyone would just register their company in Cayman Islands or the UAE and not pay taxes anywhere. That is not how it works. Generally, countries tax all companies that are managed and controlled from that country, and Singapore is no different. But on top of this, many countries also tax all companies registered there, even if they're not managed and controlled there. But Singapore doesn't do that, which makes this quite attractive, because you could theoretically have a Singapore company while not having that Singapore company be a Singapore tax resident if you manage and control it from abroad. Again, though, there is the nuance that if the income of the company is received in Singapore in a Singapore bank account, it is still going to be taxed. So actually, it makes it much more difficult to have a 0% tax Singapore company than something like a Hong Kong company or something like that. So again, generally, Singapore company makes a lot of sense if you want to actually live in Singapore. You want to have it as your main home where you're paying taxes anyway, but as a plan B or something like where you are running that company from many different countries, let's say you're a digital nomad or something like that, it doesn't make quite as much sense as something like a US LLC or a Hong Kong company because of that remittance-based taxation. So now we've covered which individuals are tax resident in Singapore and which companies are tax resident in Singapore. So whether Singapore makes sense or not as part of your global lifestyle obviously depends on how much you want to live there and things like that. But generally what I would say is that it makes most sense as a main home where you want this to be your main base and you don't mind paying a bit of taxes. If you wanted to have it as a second home or something, it is a bit more difficult to do that in a tax-friendly way, because if you have that employment pass, you do it for more than 3 years, you're probably going to be taxed anyway. And if you have that company there, it's probably going to be taxed on all of its income anyway, unless you have banking somewhere else. So that's just good to be aware of so that you can plan for that. And maybe that's fine for you, maybe that's not fine for you. But that is how tax residency as well as the general tax system works in Singapore. When it comes to how much tax you actually have to pay, like I mentioned, there are many ways to mitigate how much tax you have to pay. Obviously, the taxes are low in Singapore, but they're not zero. And if you're wondering exactly how to structure to pay the lowest amount of tax in Singapore possible and how much tax you can be expected to pay in Singapore, both at the corporate and personal level, I recommend you watch this video right here where I give you the full guide on how to structure your taxes in Singapore. So definitely watch that video next if you're interested in Singapore, and I will see you in the next one.